So I just hit recording. We'll see. Do you want me to refer to you as DCinvestor or Aftab? Or I should actually ask you how to pronounce your first name as well.
Either way, first name is Aftab, but I go by DC, and everybody knows me as DC. So either way, man.
You have this beautiful thing going on where people know you by the username of DC, and you now have the CryptoPunk avatar, and so everybody knows you by. I guess more people know you by your avatar and your username than your real face and your real voice.
Yeah, I'm okay with that and kind of prefer it.
All right. So DC, Aftab, it's really my honor to talk to you. We were chatting a little bit before we started recording. I've been following you for quite a while. Both you were recently on the Kevin Rose podcast, which I hope we'll get to in a little while. But I've been following your Twitter account. I've been following your essays and your thoughts on Ethereum and this whole crypto space. And I'm just really excited to talk to you. You seem like this very level-headed person who's not really focused on the short-term events in Ethereum, but you have this long-term view. And just from my side, really happy to talk to you. And we have these questions that were posted on Reddit, on the ETH Finance subreddit, and I would suggest I sorted them by top comments. I suggest that we just start with the first one and just see where we get. Maybe I should ask you if you have any opening statement or something you would like to say to the people who might be listening to this. I assume that many of them will be longtime community members.
Sure. And first of all, Koba, thanks for having me on your show. I'm really excited to speak with you today about Ethereum and also to connect with the ETH finance community. And I think most people kind of know who I am, but just a brief introduction for anyone who may be tuning in. So I've been a longtime member of the Ethereum community, really starting to get involved in late 2016. Was involved in the ETH Trader forum on Reddit, and then moved over to ETH Finance primarily. And in that time, I've also kind of gotten involved on Twitter and other platforms as well. So for me, I've really had kind of this long-term vision around Ethereum that's been years old, kind of waiting for us to get to this moment as we start to approach more mainstream relevance. So I'm excited to kind of talk with you about that and other things Ethereum.
Maybe a quick question. How did you actually get into Ethereum? Do you remember how the process went from you discovering Ethereum and then becoming this vocal community member that you eventually became?
Sure. And I'll start actually with my involvement in Bitcoin, which I got involved with towards the end of 2012. And that was kind of closer to the top of that bull market, which I think peaked at around $1,000. And I was interested in it primarily as an investable asset. I've always been interested in investing, personal investing in equities and things like that. And I had heard about Bitcoin as early as probably 2009, 2010. Didn't act on it then, of course, as we all wish we had at that time. But I did kind of look at it. I was like, okay, this is kind of interesting. I just kept it in the back of my mind. And then it started to become more pervasive in the popular media narrative in around 2012. And they started talking about it more. I was like, okay, I'm going to buy some of this. So I bought a bunch. And then it kind of topped out, and I kept buying through the bear, and I was like, okay, I'm going to keep buying. And eventually I ended up selling it at a loss in like the 2013, 2014 timeframe, because I had bought a condo at that time, and I was like, well, I'm going to use this as a down payment. So in hindsight, had I not done that, I could have paid for the entire condo and then some.
Probably an expensive condo in 2021.
Absolutely. Yeah. So I got out of Bitcoin, and then, around 2016, late 2016, I started to hear more about Bitcoin again. So I logged into my Coinbase account for the first time in a long time, and I saw this new token called Ethereum. And I was like, well, what is this? Because for a long time, Coinbase had basically just been Bitcoin only. And I kind of started to research it, learned about kind of how it's this programmable blockchain. I was like, this is really interesting. And so it was something I was a lot more interested in. I didn't actually buy any because I was getting married shortly thereafter and had a lot of expenses. I didn't buy any until early 2017. But I kind of got involved on Reddit first. And my initial involvement in the forum on ETH Trader at the time was actually trying to encourage people to keep a level head around what was then ICO mania, really in the kind of April timeframe of 2017. People were just going ecstatic about some of these ICOs. And, I kind of urged some caution. I was like, have these projects actually delivered any value to get this kind of attention and your money from you? And are you going to do better than just holding Ether long term? So that turned out to be a prescient warning. And I kind of just continued to stay engaged with that community, talking a lot about ETH and Ether as an investment, and carried that forward into ETH finance as well. And kind of during the 2018, as we were close to the top of the market into the bear market, I started getting involved more on Twitter as well. And my perspective there was, well, there's a lot of discussion that's happening there that I wasn't really paying attention to. But two, I was also overwhelmed with the amount of disinformation that was being spread about Ethereum and these popular narratives. And I got frustrated. I was like, well, I've got to get involved in this discussion. I need to share my understanding and the facts of what is actually going on. And some people listened, some people didn't, but a lot of those things that I and others said back then have kind of been proven right in the past year or so.
When you discovered Ethereum back then, there were plenty of other blockchain alternatives or blockchain protocols or projects. What was it that attracted you to Ethereum, and how would you say has that evolved in the last 4 or 5 years since you maybe first discovered or first bought Ethereum or Ether?
So it's really, for me, what separated Ethereum from other promises and projects was actually the community. And it still continues to be what keeps me invested and focused on Ethereum. Ethereum has kind of become this emergent construct. And I use that term in the sense of it is kind of transcended itself, and it has bootstrapped this community around it to the point where if it faces like really hard challenges, it has its own mechanisms and community and now invested stakeholders, not just in Ether, but in all of the other assets built on Ethereum that have a real incentive in making sure that those problems get solved. And so when I started to see that, and the other thing that attracted me to it was really the ethos of decentralization. And it wasn't this project that like was sold to a bunch of VCs at like 50% allocation. Yes, there was a pre-mine and pre-sale to stakeholders, but they weren't VCs, they were individuals. A lot of them have actually sold their Ether. There's been a tremendous amount of Ether distribution in the past several years, made further by the extended period of proof of work mining as well, which has also released a lot of Ether supply. So I think that kind of legitimacy is what really attracted me to Ethereum, and the multi-client focus. There's a lot of elements like that where Ethereum to me didn't seem like it was taking like the easy way out on some of these challenges. So to me, that was something that was really attractive, and I saw fundamental value in that in the same way I had seen fundamental value in Bitcoin years earlier.
I want to come back to you moving on to Twitter, because we have a quite funny question about that. But you recently, or relatively recently, you moved into the space to work full-time. You left your job, if I remember correctly. I think I read somewhere you were working as a consultant, probably in the DC area. I'm not sure, but you left that job and now you're working full-time in the Ethereum space. Can you share a little bit about that transition and how what you actually do today?
Sure. I am based out of the DC area, and I've been a public sector management consultant for the past 15 years of my life. And I really advised organizations on their organizational structure, their strategies, their business models, their products and services and value proposition, things like that. So that, I think that gives me somewhat of a unique lens on the space as well, because one, I'm older than your average participant. So I have, I grew up actually during the consumer internet, which I think gives me an interesting perspective on the rise of the consumer internet, which I think gives me a good perspective on what is happening now with Ethereum. But two, I've also been focused on just a completely different space. And I do think that there's a lot of lessons that we can bring from more traditional spaces into Ethereum as a public good. And so I'm really excited to be able to explore that in the space more full time. And right now, I'm really just taking my time engaging with teams and with projects and protocol development efforts, and just kind of helping out where I can, talking with teams, sharing my insights. And I'm not even really charging for that right now. I'm just kind of like engaging with people because I want to help the ecosystem. I have received a bunch of different job opportunities and offers in the space. But for now, as someone, I've been working full time for 15 years. I kind of just want to take a break and think about what I want to do next and what that's going to look like. And it's such an exciting time in Ethereum that I feel like I can spend my entire day and then some, just focusing on the space as I do, and trying to engage with people and educate them. And it's basically a full-time job just in of itself.
Yeah, as an outsider, I've been following the space quite. I'm just so fascinated by everything that goes into this. And you have these people like Balaji Srinivasan, I hope I pronounced his name right, and he has these ideas about um, whole new economies that can be built on Ethereum or decentralized networks, and they're finally reaching the scale where these things are actually possible. They're no longer just some pipe dream, but they're actually possible. And you stop to think about these prediction markets and all these kind of and decentralized computing and whatnot. And it's just so fascinating. Like there's no shortage of information, of a vision of the future, as they on the Bankless podcast often say, of going west. There's this there's this sensation that this space is just such a big portal into other different areas, and I can imagine that there's just plenty of stuff to do and fill your days with.
Absolutely. And, you know, one of the things that I articulated a few years ago was that Ethereum will be successful when it's not just the protocol nerds and like the core developers and so on that are really kind of involved in it and steering its future. It's all of the people who are building things on top of Ethereum. That's how we'll know that it's starting to be successful. And I legitimately think that we've started to hit that point with, and I think the first real apparent example of that was DeFi Summer from last year. And for those who don't know, there's a big run up in decentralized finance related assets on Ethereum and a lot of use of the protocol to support decentralized finance applications. A lot of those people who are using that were not people who are like Ethereum fans even. They were like, well, I'm going to use this because it serves my needs and I can make money doing it and I want to use it for that. And to me, that is like one of the ultimate expressions of Ethereum's success. We're seeing that again with NFTs, and we're just going to keep seeing that in industry after industry until Ethereum swallows a lot of different things and it becomes this dynamic and very vibrant economy. That's my opinion.
How did the Kevin roasting happen?
Well, Kevin just reached out to me, to be honest, and I had interacted with him a little bit here and there in various forums and Discord servers and so on around NFTs, but I didn't really realize that he was following me for a while and saw value in some of my perspectives. So yeah, I was honored to be on his podcast and be the first guest on there, and we talked about NFTs. And for those who haven't listened to it, that's available from his Modern Finance podcast, episode number 1. And I think it was just Kevin's a really great interviewer, but also he's an extremely knowledgeable participant who brings with him the success of having created a platform like Dig and really was a pioneer of Web 2.0. And so I think his perspective on the space is just so valuable. So it was an honor for me to kind of talk with him and share my thoughts on NFTs and Ethereum.
It seems like that move to Twitter paid off, but let me just ask Ethan's question. Ask him why you abandoned Reddit to hang out with the crypto Twitter losers.
Yeah, I don't begrudge anyone for having that perspective of crypto Twitter losers because it is a tiring platform at times. I will say, so first of all, I don't think I've abandoned Reddit, but I don't engage quite as much on Reddit as I used to. The main reason why I started doing more on Twitter was, as I mentioned earlier, I just saw this degree of misinformation during the bear market. And I felt compelled to go out there and say, no, you guys have it wrong. This is what Ethereum actually is. Here's why it has this kind of unique value proposition. And I just wanted to kind of help get the word out. Over time, I started to engage with people more and more there. And I realized that I could have a much bigger impact by engaging with these people in this open forum that's just kind of, one of the properties of Twitter is almost anyone can see your tweets, right? Even billionaire investors or celebrities, they see my tweets. Some of them like follow me and stuff like that, and retweet my stuff. Like you just don't have that kind of reach on Reddit. So I still enjoy Reddit for being able to have more of those in-depth discussions, but just in terms of getting some of those quick sound bites out, I felt like Twitter was a better forum in which to do that. So, but I still like Reddit. I'm a huge fan of ETH Finance and kind of everything that's about. I think also I'll say that I started off on ETH Finance. I never really gave investment advice, but I approached it more from the perspective of an investor. And now I'm still an investor, but I also have become kind of more of a very involved community member that's really focused on making sure Ethereum is successful long term, and beyond that, decentralization is successful. And it might not be like just Ethereum, but that's what I'm passionate about, and that's what I want to focus on. And so I just saw more of an opportunity to do that more on Twitter. And on Reddit, I still engage, but yeah, if I post comments in the daily, a lot of people don't even see them because of how Reddit works, unfortunately. So I do try to use both though.
Did you consider, or how did you think about stepping out of the, say, anonymous or pseudonymous account that was or is DCinvestor? Because if I remember correctly, you actually started using your real name on Twitter. You never really mentioned it on Reddit. That was completely anonymous or pseudonymous. But was it did you have to contemplate a decision? What went into going? Was it necessary to actually post under your real name on Twitter to become this kind of community leader or member that you've become?
I don't know if it was necessary, but it was something that I was thinking about. And it was honestly a couple of years ago when I thought, well, maybe I will work in the space and maybe it would be easier for me to do that if I was more of a known person, not just, behind an avatar. In hindsight, I don't regret it, but I also don't focus on it necessarily. Like most people still know me as DCinvestor, and I'm fine with that. And I may just fade back into DCinvestor more or less. I will say that the way that I use these social media platforms is truly to engage with people and to have discussions. I don't really focus much on brand building. I've had some people reach out to me and be like, "How did you build up this Twitter following?" I was like, I have no idea. It's not something that I focus on. It's just I literally just post, and I did this on Reddit too. I just post whatever pops into my head, and I sometimes I just want some engagement on it, and I want to hear what other people have to say about it. So I just post it. But there's no grand strategy that I use in terms of farming engagement. I don't monetize my account, and not to say that I would shut it down tomorrow, but it's not something that I focus on as an asset, if that makes sense. It's just something that I like to use as a way to engage with other people.
ETH Revolution asks, is this time actually different? How do you see the 4-year cycle playing out versus the new paradigm of a post EIP 1559 plus the merge world?
So I think EIP 1559 and the merge present a paradigm shift in how ETH will be understood. ETH and Ethereum will be understood by the broader market and more mainstream audiences that continue to gain exposure to Ethereum. It is a huge, huge deal because for years, one of the most common criticisms about ETH has been, well, usage of the network does not accrue value back to Ether. Therefore, there's no reason to hold Ether. So all of a sudden, EIP 1559 with the fee burning mechanism is now going to create a direct value capture mechanism for all holders of ETH. That is a game changer, number one. Number two, proof of stake is also going to now turn Ether, or has turned Ether already, into this really valuable collateral asset, which is going to provide security for the network. So it kind of takes this whole mindset of Ether from this, here's this asset that I buy and use as gas and just burn and it has no other purpose, into this, here's this asset that I want to hold and preserve and not necessarily destroy. And if I spend ETH on gas, I might want to spend and replace, as I do, because I don't want to lose my Ether. And it's also this asset that is useful in DeFi as a store of value, collateral asset, medium of exchange, and even a unit of account for things like NFTs. So I think that fundamental perception in Ether has now shifted the discussion into a whole new territory, much closer to Bitcoin in the sense of store of value type discussion. So but the question was, is this the end of the 4-year cycle? To be honest, I don't know, but I don't think so. I think that we're still going to have the market, because bear markets or bearish periods are caused by periods of exuberance during a bullish period. And I don't see human greed subsiding enough that we're not going to see that again. I can see Ether running to a very, very high USD valuation and then kind of capitulating from there. And we enter some kind of bearish period. Are we going to see another 90% drawdown? I think possibly not. I don't want to say probably even, but I think possibly not. I think that we're going to see Ether evolve into this asset that is used for all these other purposes. And so the sell pressure will not be as great as during the ICO period when all these projects had ETH in their treasuries and they were kind of waiting to dump it. So I don't know exactly what it will look like. I will tell you that over like the 5-year period from today, I'm incredibly bullish on Ether. And I think that we'll be looking at valuations. I mean, even up to like $100,000 per Ether would not surprise me if Ether is used as this base collateral reserve asset in a global financial ecosystem.
So the 4-year halving cycles, whether you use the stock to flow model or another model that you might put value on, if we were thinking about Ethereum and trying to accrue or discuss how the value accrues to the network itself, then basically you have the triple point asset framework from David and Ryan over at Bankless, and then you have this ultrasound money meme or essay, I should say, or thing from Justin Drake, if I remember correctly. Are these two key parts of the puzzle in order to try and understand Ethereum's long-term value accrual, or are there other pieces of the puzzle that you should add or that people should look into when they try and get a sense of what the long-term value might be?
So I think both of those are great resources to understand Ether as an asset. And I will say, and I mentioned this before, is like when the developers first created Ethereum, maybe they didn't ever think about Ether as this like valuable asset in this sense. Maybe, and I don't know what they were thinking, we'd have to ask them, but maybe they truly just viewed it as gas. But Ether has these unique properties that make it this really reliable, censorship resistant store of value, which is now has characteristics that are being strengthened through these upgrades in a very, very substantial way, right? So all of the FUD of like Ether is this asset with infinite inflation, and there's an infinite supply, and there's no, and the value doesn't accrue back to it. All of that is going to be rendered completely moot once EIP 1559 is implemented, and certainly once proof of stake is implemented. So that's like a huge shift that I don't think like the market has really addressed yet. I think also the other part of this is the growth of the Ethereum digital economy. And the more that economy grows, the more value it confers back to Ether. Not always directly, but often indirectly, because and sometimes people will say things like WBTC is a good example of this. When WBTC, which is wrapped Bitcoin that's usable on Ethereum and it's kind of stored with this custodian, was first introduced, everyone's like, oh, this is going to kill Ether, and all the DeFi participants are just going to use WBTC. And I was like, I don't think so. This is a custodial asset. There's additional trust assumptions beyond Ether, and at the end of the day, it helps reinforce Ethereum as the settlement layer where all of that economic activity is happening. So did WBTC on its own help reinforce Ether as an asset? Maybe not. But did the availability of WBTC for use in DeFi against Ether, against USD, against other assets, does that contribute in a small way to this broader economy? I think absolutely. So I've always taken the view of on Ethereum, I don't try to judge use cases like that. I'm not against wrap Bitcoin on Ethereum at all. I want every asset in the world to be on Ethereum, to be honest, because I've always had this view that the more economic activity there is, the more valuable the network is. And that's always been my fundamental thesis for Ethereum and Ether.
Going back to the first part of the question, is this time actually different? And I would assume, or I would add, or maybe I can just let you answer the way you interpret the question, but I think that might be hinting at the current bull market more than whether the 4-year cycle or some other explanation of the intrinsic value of Ethereum is what carries us forward. But I think the question was was pointed at the bull market today. How do you look at this this moment in time versus maybe 2017 or whatever lies in front of us?
So I do think that we'll still probably see some kind of bullish exuberant period followed by some kind of a pullback. And I don't know how long that pullback will be. I don't know how deep it will be. I think how it is different this time is that there are more fundamental value drivers for Ether. And we're actually entering a world where there might soon be actual mainstream adoption and use of Ether through like layer 2 technologies. That is fundamentally different from 2017 and 2018, when most of the valuation was actually driven by ICOs, and most of which had delivered no value and were just waiting to sell their Ether. So I think that is a fundamental shift. But I don't necessarily see us escaping a 4-year asset cycle yet. Now, I know some people have talked about a super cycle. I'll kind of like believe that when I see it. And I can tell you what I'm doing, by the way, and this is tentative, but my goal is to sell, as little ether as possible through this cycle, because I am very focused on the long term. And I won't say that I won't sell any, because I've accumulated a lot over the years with the expectation of selling some. But now my calculus has shifted more to, well, how do I keep as much as possible as ETH, as this productive asset in DeFi and in staking, because I feel like the long term is so much more important. So I guess that's my view, is I would rather store more of wealth in ether, even through a bearish period, earning staking yield, earning DeFi yield, rather than trying to like time and sell the market, just to try and maximize USD and pay taxes and all of that. I really believe in the network like long term, and that's kind of where my perspective is.
So when you talk about ETH for the long term, does that basically assume that you're putting the ETH to work, be it DeFi yield, be it staking yield? You're not really, so maybe I should ask a percentage, but in your mind, in that conception, most of the ETH is being put to work to either secure the network or in lending pools or whatnot, or liquidity providers. But it's not really that you're keeping a major part of your ETH. It's just sitting idle, the same way it could have, say, you could have held it through 2018, 19. There are now all these protocols and all these possibilities. So you're actually putting the ETH to work.
Yeah, absolutely. I mean, I put a lot of my ETH to work in various DeFi protocols. Most of them are quite conservative, and a lot of my strategies just involve using Ether as a collateral asset, which I borrow against to buy other tokens, or that's really what I focus on. Versus, I don't use a lot of the risky farms. It's just not worth it to me. I understand why some people enjoy doing that sort of thing, and I did some of it last DeFi summer. But I just want to be able to sleep at night, to be honest, and not have to worry about, am I going to get rugged tonight because someone's selling half the supply or whatever. It's just not worth it to me. But yeah, I think we're going to have more and more opportunities to use Ether in productive ways, because I do think it's like this special kind of asset, and we barely like scratched the surface of what is going to be possible with that. So I really see Ether evolving into this base decentralized collateral asset. I've been using the term programmable reserve asset or programmable money for a long time. And that's really what I view Ether as. So the more uses that we can discover, and it really is a discovery process for that asset, the more valuable it becomes, because price is just a reflection of scarcity, which is supply and demand. So my view of Ether is, like, I always say, like, memes are optional for Ether. But we've got some good memes that are in the pipeline, but like, it's really that utility, and it's that whatever drives the scarcity, that is what's important.
Not selling ETH, funny username, has asked this. Has DC tried Decentraland or crypto voxels, and what does he think each needs to succeed? That's one question. He actually has three questions. That's the first one. The second one is, and this is adjacent, will one metaverse become the hub for other games and 3D spaces, or will different metaverses serve different needs? Maybe start there.
Yeah, so I think that Decentraland and crypto voxels are both interesting first attempts at a metaverse. And I think that they each have their pros and cons. Decentraland feels a little bit more proprietary and a little bit more closed, and it's really centered around the mana token, which may actually be a key aspect of its success or a hindrance to adoption. TBD on that. I think crypto voxels is more of just this pure play. Here's digital land, go and build stuff, kind of Minecraft style. Both of them right now kind of leave me wanting more, but they kind of demonstrate the value of these economies. And some of the land in these platforms is worth quite a bit. But I don't really know what the online metaverse looks like yet. I don't know if the online metaverse is going to be like a land constrained thing. Like, do we want to take the limits of like the real world, like space, and then replicate that in digital? Is that the long-term value proposition for billions of people using an online metaverse, or even hundreds of millions? It just doesn't like feel scalable to me in that way, right off the bat. So I haven't made any like big NFT investments in either of those, primarily for that reason. I think it's possible that a third entrant could come along. And in fact, I mean, for some people may be aware that Epic Games, the creator of Fortnite, one of the largest game developers in the world, is creating their own metaverse. And I don't know what the details of that will be, but like, imagine if they create something and they allow, I do think a key is going to be that they allow people to bring their own assets, like bring your own NFTs. Because any ecosystem that attempts to be closed is not going to be successful in a metaverse context. You have to honor the fact that people have assets. They're going to be wanting to bring their own stuff in. Like some walled garden thing, like probably like what Facebook would try to do, is not going to be successful at being quote unquote the metaverse. I do think also it's possible we will see different metaverses, perhaps localized by geography, but also maybe even just localized by community niches, right? And I think this is an ultimate expression of the internet age, and even more so the Ethereum age. It gives people who have common interests anywhere in the world an ability to coordinate. And now with Ethereum, they have an ability to coordinate economically. So I could see multiple metaverses evolving around different niches and communities. So we are like barely in the first inning of this, and it's too early for me to say what it will actually end up as.
There was a third question from Not Selling ETH. Will he show up to Hawaii with an actual dark gray hoodie and purplish shades?
It's definitely possible, and it depends on it depends on how hot it is, because I hear Hawaii is generally pretty warm most of the time.
It's just dependent on the weather, on how hot it is.
There you go, exactly.
All right, then let's see. Throw away some random string of numbers asked. DC is always positive and posts well thought out catalysts for growth. Question is, what, if anything, does he see that would slow growth or make another chain more attractive than ETH? Does he have any hedge for a scenario like this?
Yeah, and so I think first, there are risks associated with an investment in Ether and with Ethereum in general. And so first, let's start off with the idea of execution risks. So I think a lot of people are concerned, like, well, Ethereum has this ambitious roadmap of like proof of stake and eventually sharding and so on. Is there risk there? There is execution risk. However, I actually view that execution risk as minimal, because just from my involvement in some of the development process and observation of how it works, the quality of talent working on these issues is quite incredible. And I am of the belief that if Ethereum runs into any true challenges, there's a whole global, there's a whole world of people ready to help solve them. And actually that community grows, it scales with the value of the assets that are created on top of Ethereum, which is interesting, right? So now, for example, all of these NFT creators are also now stakeholders in Ethereum. Every DeFi app creator is a stakeholder in Ethereum. All of these people have a vested interest in making sure Ethereum succeeds, versus in 2017, 2018, during the big Ethereum killer times, everybody wanted it to like fail because everyone was pitching their own layer one, basically. And I think that is a fundamental kind of shift in how we think about Ethereum and Ether. So I think that's one set of risk. I think the other risk that perhaps is a little bit more palpable is around government intervention and regulation. I do worry about certain governments like the United States, for example, taking a heavy-handed, ham-fisted approach to dealing with issues that require a lot of nuance. So far, actually, I've been mostly encouraged. But what I'd also like to see governments do is offer more official sanction and safe harbor to allow people to build on these platforms, because we still see a lot of this innovation occurring overseas outside of the United States. And this, I'm saying this as a US citizen and resident. I do want the US to be a part of this. And I want us to, in the same way that we help really drive the growth of the internet and really we're leaders in that, I would love to see us play a similar role around Ethereum and blockchain. But I think that with Ethereum, we now have the benefit of the internet, so to speak, right? So this is already a more global endeavor, and it's much more federated across the world, which I think is also a positive, by the way. I don't think it should be like a US only game or China only game or any nation state only game. It should be global. And I think that global game actually will create incentives for more nuanced approaches, because any nation state that tries to come down hard on these technologies on Ethereum has the potential to be left out of the next internet, the internet of finance, the internet of value. And so I think that is a real powerful motivator to making sure that governments kind of take more of a laissez-faire, hands-off approach, maybe even an accommodative one. So I think that's first. I'll tell you what I don't worry about as much. I don't worry that much about other chains becoming like that much more attractive than Ethereum, to be honest. In my mind, there's not going to be, well, I shouldn't say there won't be, but it's unlikely that we'll see true credible competition for a global settlement layer outside of Ethereum. And I say that because Ethereum, because of the properties of how it was created, how it's evolved, has this legitimacy that really would be very difficult for any other programmable blockchain to be able to bootstrap. And to be perfectly honest, most of them don't even try. Like they sell 50% of their tokens to early stage investors, which are huge institutions. They're going to dump, and they implement things like on-chain governance, which I think is not ideal for a layer one kind of base layer blockchain. They don't attempt to make their base asset a form of desirable money necessarily. And so for all those reasons, I think Ethereum has this moat around it. And I think it's going to be further reinforced as ETH evolves more into this money-like asset. And I use money just as shorthand to say this asset that is valuable and usable for a lot of purposes. It would be very, very difficult for a competitor to credibly bootstrap an economic alternative to Ether. And I actually think that long-term, the value proposition of using Ethereum is going to be censorship-resistant access to Ether and to Ethereum native assets. If you just want cheap, high-speed transactions with a lower level of security, you're going to have an option to use any number of side chains. And so I actually see the world bifurcating into Ethereum at this max decentralization end, and then all of these centralized side chains, like Binance Smart Chain. I think banks are going to create chains. I think governments might create chains, and so on. And it's the space in the middle where I'm still not sure if there is a long-term value proposition. And I actually wrote a blog post on this, and you guys could, if you guys are interested, you can go to DCinvestor.substack.com, where I have my blog, The Catalyst. I've only written one post. I'm only going to write them when I feel like I have something interesting to talk about. But there I kind of talk about, will we see this multi-chain future? And so anyway, but I think the last part of your question was, is there a hedge against these things happening? To be honest, there is no great hedge against government crackdowns. I do think people should have a somewhat diversified asset portfolio if you're investing in the space.
So Ethereum Classic.
Yeah, no, well, I think what I'm actually referring to first, let's take the government crackdown.
By the way, for people who aren't aware, this was obviously a joke.
yeah, I did that as a joke, but I think let's take the situation of a government crackdown on crypto or on Ethereum specifically. I don't think you're going to find much safe harbor in the crypto space against a situation like that. Mm-hmm. So your best bet is going to be to have some portfolio of some stocks and things like that, equities. I'm still bullish on equities long-term. I understand they're not in favor right now, but in a world that is shifting more towards automation, the owners of capital, I think, are going to be rewarded over the long term, over 20-year timeframes. It would be foolish to think that they're not going to be, and stocks do have cash flows, a lot of them. So I'm going to own some equities. I might own some real estate and properties as well as part of that. But I intend to remain mostly crypto heavy, because I do think that this is the future, and mostly Ethereum heavy until I have a reason to believe that Ethereum won't be a key part of that. I think that if you're looking to diversify in crypto itself, that is a hugely overrated value proposition in my mind. I'm not going to hedge, I'll just pick on Cardano for a second, because I think it's hilarious that some people are like, oh yeah, I'm going to hedge my bet in Ethereum not being able to deliver by buying ADA, which is the Cardano token. And it's Cardano hasn't been able to deliver smart contracts in 4 years. It's that's how you're hedging Ethereum. So to me, that it just doesn't make sense. So if I want to hedge for a multi-chain world, I would much rather actually buy DeFi related assets. Why DeFi? And a lot of Ethereum DeFi related assets, because one, they're already succeeding on Ethereum. They have product market fit, right? And I'm just talking about some of the blue chips in a lot of the components of an asset like DPI, which is the DeFi Pulse Index. Those are the types of projects I'm talking about. They're already a product market fit on Ethereum. If we do see a multi-chain world, they're going to branch out in intelligent ways onto those chains. And we already see some projects doing that. So I would much rather let them try to figure out where that use is, rather than me buying L1 tokens, which may materialize no meaningful long-term use. And I don't really play a lot of short-term speculative games. I focus on long-term value.
Yeah, and it's interesting that these protocols or these companies that are building on Ethereum, they have the income, they have the economic proposition, they have the users. They can make different decisions on branching out to sidechains or other projects, but they at least have a much bigger incentive to move out. And it's I would say that it's probably makes more sense to bet on those companies or those people instead of just some other chain. I saw this post, I thought it was quite funny. This guy or gal wrote, the year is 2030. Cardano has released its 736 report on why it's good to release 700 papers or reports.
Yeah, yeah.
The memery in this space is quite funny, of course, but there's also something you mentioned about the economic proposition. Just take one look at cryptofees.info. I think this week Ethereum had a 24-hour window where it burned, or sorry, where up to $89 million was paid in transaction fees. I mean, just of course, we have to be careful what the input data is, and I don't want to just assume that the data is correct. But the divergence between these protocols is just so enormous that you just wonder, like, when will this? I mean, when do you give up? Like, how long can you make this argument? And there's also this thing that I've been thinking about. Yeah, like you have if you wanted to make sense investing in the 20th century, you would diversify your portfolio between different holdings. But there was no real sensible network effects business, be it Facebook or these typical internet companies like Amazon and Facebook and whatnot, and same with Ethereum. Like I think the 21st century approach is often to bet heavily on the business, or in this case on the protocol that has the biggest network effect. And that might be Bitcoin for some, it might be Ethereum for others. But just look at the network effects, and you can take Metcalfe's law that Roald Dahl talks about quite a bit. But the 21st century diversification is actually, I could state, is probably bet for the category winner. I mean, Shamath Palihapitiya talks about this as well. And I kind of find it makes little sense to diversify in a space that is so emergent still, and especially that is run on these network effects.
Absolutely. I think you hit the nail on the head. And when I think about it, I'll tell you, I ruthlessly focus on value that people get out of using these chains.
Mm-hmm.
Okay. And I define, and this is from my own training as a consultant, probably, this is really drilled into my head. Value is not how the creator of something defines it. Value is defined by the users. And are they willing to pay to use something? Are they willing to, how inelastic is the demand for the good or the product produced by that network? And I think we can see very, very clearly in the fee numbers that the demand for Ethereum block space is incredibly inelastic and is actually not price sensitive, meaning to me that it actually conveys a lot of value. Now, sure, there could be some monopoly effect to that, but actually with EVM sidechains, I would say there isn't necessarily that much of a monopoly. You can actually get some of the utility on some of these side chains. So why are people paying so much to use Ethereum? And just to put this perspective in numbers, I've got crypto fees up right now. The past day had $107 million worth of fees generated for Ethereum.
So just for the record, we're recording on Thursday, May 13th, 2021. So we had $107 million.
Which is an astounding number. And Bitcoin was 3.9 million. So just quick math, that is a 27x. That's a 27x times the value that users of Ethereum are generating from using Ethereum block space versus Bitcoin block space. And Bitcoin's kind of the number two, and the rest are basically like insignificant. They have fees that are number at like Dogecoin is, I think, is the third protocol with 57,000 versus 3.9 million versus 107 million. So you just get the sense of, and I understand that a lot of people look at fees and they take the wrong message. They're like, oh, Ethereum's too expensive to use. And I know this analogy has been used a lot, but it's like saying the most popular restaurant, which may also be the most expensive one in town, is failing. It's kind of like, no, it's proving the demand. What we need is more scaling on top of that so that we can achieve even more potential. But seeing like seeing a fee floor like this, even being workable, I think bodes really well for Ethereum long term.
Yeah, and it's proving a product market fit, I would say, and give the market just time to develop. Like the CryptoKitties project was quite early, but the NFT world is basically the same. The technology is the same. It just needed another 3 or 4 years to really take off. And so but once you have this product market fit, like in the case of CryptoKitties, you can at least build on those things and then introduce all kinds of other ideas that you can build, in this case with NFTs. But as long as there is no product market fit for these other chains or other protocols, then what is there really to talk about or to hedge with? I would argue.
Yeah, absolutely.
Logris the Bard asks, we've touched a little bit on it, but I'll just read his entire question. To what degree does he participate in yield farming? Is he staking? Beyond the skyscraper analogy, can he expand more on why he believes the network effects will generate more demand for network space than the coming scaling technologies like rollups, sharding, etc.?
Yeah, so I think that so yeah, I do some yield farming, and I'm using most of my Ether right now actually as a collateral asset. And I have some that is going to be staking, and I'll be staking more and more of it in a mix of personal staking, but also I will probably be using some custodians for some amounts of it just to have more surety, and I will distribute that appropriately. But yeah, I like I mentioned earlier, I'm quite conservative with how I use my Ether, because the last thing I want to do is lose my Ether, to be perfectly honest. And if I buy other assets, like, and people are often perplexed by this, it's like, look, I haven't sold any Ether to buy DeFi tokens or to buy NFTs. Since the whole bull market started, I've not sold any, because I know that the potential of Ether is huge. I would rather like borrow against my Ether, buy some of those assets, later sell some of them at a profit and be able to pay off the loan that way rather than sell my Ether. So that gives you a sense of how strong my conviction is on Ether as an asset. I think that the second part of the question was around rollups, right?
Yeah, so the second part of the question was this: beyond his skyscraper analogy, can he expound? I mean, I don't know if the skyscraper analogy makes okay, you know what he's referring to. Beyond the skyscraper analogy, can he expand more on why he believes the network effects will generate more demand for network space than the coming scaling technologies like rollups? I'm not quite sure if I understand the question myself. I think basically this is how I interpret it. Is the scaling of the network going to build the infrastructure that is necessary for all this additional economic activity? At least that's how I interpret the question.
I think I kind of have a read on what he's saying, so I'll try to answer this. So first, I think that let me just explain the skyscraper analogy. So this is kind of an analogy that I coined to explain how I view layer twos on Ethereum. So imagine L1 block space, which is what most people are submitting transactions on now, right? When you submit a transaction on Ethereum, you're typically submitting it on L1. There's a limited amount of block space, and we can't really increase it very easily without compromising decentralization. So that is why Ethereum is sometimes expensive to use. During periods where demand for that block space dramatically exceeds that supply, which kind of is capped to some extent. We can raise the gas limit a little bit, but not a lot. The price goes up. It has to go up. And that is how the network kind of manages demand for use. Otherwise, there would be infinite demand to use Ethereum. So imagine that Ethereum L1 block space is like the island of Manhattan off of New York, right? And imagine it's like Manhattan before all of these skyscrapers were built. And it's all single-story houses, maybe some barns, maybe even some farmland, right? So what kind of tax base can that version of Manhattan support? Not very much, right? Because you're capped at how much economic activity can happen on that land. Now, instead, build these skyscrapers, buildings with thousands of units within them, supporting residents, supporting commercial enterprises, and so on. All of a sudden, the tax base that you can draw from that becomes much higher. And in this case, in this analogy, the skyscrapers are really these Ethereum layer twos. And what Ethereum layer 2 technology really does is it is secured by layer 1 Ethereum without any additional trust assumptions, first of all. And through basically the properties of mathematics, you're able to keep that secure without having these additional trust assumptions as you would have with a side chain. So it's basically as secure as using Ethereum layer 1, but it increases the transaction density. So one layer 2 rollup can write a small amount of data to the layer 1 chain, and it might represent hundreds or thousands of transactions in the space that would be like a few transactions previously. So I think that presents a really important value proposition for scaling Ethereum. But if you really think about it, what that's going to do long-term is if we move to a roll-up centric future, a lot of the gas fees that rollups are willing to pay will actually be a lot higher because they represent more transaction density, right? Just like you would charge a skyscraper more in property taxes than you would a one-story house built on the same property, because there's that additional economic activity to support that. So that is actually going to lead to even higher gas prices on layer one eventually. Most users will only interact directly with layer two. And that means even more ether is going to be burned than people really understand. This is kind of a longer term view after rollups start to gain scale. I think that stacks with other technologies that are being proposed, like sharding, and sharding will start off as a data availability layer on and as part of the layer one protocol, and eventually may expand to include execution. But I think it's always going to be, it's basically in support of creating more rollups, and having that extra data availability is actually useful for rollups also. I think also, another thing to think about is when you consider the rollup centric future long term, if everyone is just using rollups, you're not really going to have users going back to layer one. And it's going to be a really funky couple of years. I'll be perfectly honest. I have no idea what it'll look like. But one thing to consider is consider how Ethereum layer one development has worked over the past few years. It's really been through this core development process. It's very slow. It's very methodical. It's very painful, to be perfectly honest. It's hard to get changes through. It can take months or years to get changes actually implemented to build that consensus. Shift to layer two, and this is now going to be a lot of private enterprises developing scaling technologies at lightning fast speed. And it's truly going to be market-driven scaling and protocol development. And we're going to see different kinds of norms evolve. And I think as a community, it's onto us to keep those players honest. Mm-hmm. But I'm also really excited at the speed of innovation that we're going to see. It's going to be unlike anything that we've seen in the space so far.
Yeah, to expand on the skyscraper analogy, you can offer a platform, or in this case, Ethereum can be a protocol where property managers or real estate developers can build in very high, quasi-limitless buildings, but we're not really, or people aren't responsible for the property managers themselves. They can still be faulty, or they can be dishonest. We'll see what happens in the future, but at least the scaling will be there. The infrastructure will be there for people to build whatever they want to build, which isn't really possible today on layer one, or it's just prohibitively expensive.
Exactly. And so what Ethereum literally becomes in that future is it becomes this base trust layer, and it might be used for dramatically different purposes in 10 years. I don't know. Or the usage that it will be used for will look totally different.
Pocket Wailord asks, how's the post-desk job life been?
I've loved it in the sense of now I have more time. I was giving the best of my brain power to others for 15 years and working pretty long hours in a pretty demanding job. And now to have some of that back is pretty liberating. I will tell you that I struggle a little bit still with I need to add more structure to my day. And I think part of this, I think all of us have suffered this really over the past year with the kind of, pandemic times. We've all kind of struggled with getting into a routine, and how do you just not sit in front of your computer all day and stay inside and so on. I struggle with that sometimes. And so I'm still adapting to that. But now as life returns to normal, I'm hoping that that'll be easier. But yeah, I would encourage anyone who's considering something similar is come up with a plan, set some goals for yourself. And if you're structured, even if you're not a structured person, try to create some structure for yourself, because that's really what's going to be beneficial.
Are you still married?
Yes, I am. Yeah, I've been married for a few years now, happily. And yeah, we survived the pandemic. We survived being around each other 24/7 during the pandemic times, which I think is difficult in of itself. But yeah, we're just starting to kind of get back to life, and we're looking forward to taking some trips and getting away and so on.
Nice thing about a bull market, I guess, is that at least more people than last year can actually think about what a post-desk job life would look like. At least if they play their cards right, I would say. So Hans Burger asks, many people are pointing to an extended cycle. The notable 150,000 per ETH prediction is pointing to a time horizon of March 2022, and there's 50K puts for around that time as well. Does he think we'll have an extended cycle? What's different this time that will lead to the market extending that far into next year versus ending around New Year's like all previous cycles?
So I would be shocked if we ended up at like $150,000 in this cycle before a pretty market pullback, right? And the pullbacks are caused because you have so many people that have made so many profits along the way that they start to sell off, right? And we've actually already seen that among some of the OGs from ETH Finance and so on who held through the bear, and they had the PTSD was so strong that they get to 1,000, they're like, I need to sell because this could go back down. And I kind of said at the time, I was like, well, I'm not going to sell anything because I'm really focused on this long term. And that started to crystallize more for me. So I don't really like to give like definitive price predictions. I will say I was on Bankless. There was a bull case for Ethereum episode that we filmed in December of 2020. And at that time, I said 4K to 20K, which sounded extremely outlandish at the time. And obviously, we've already hit the bottom of that as far as the range. So I've kind of amended that a little bit to say, well, I think this cycle will probably go between 10 to 30,000. And then we'll have some kind of a deeper pullback. How long that pullback is, like we talked about earlier, I really don't know, because we are also coupling this with true adoption. We're coupling this with a profound strengthening of Ether as an asset. And so we could enter, I think we could enter a period where any bearish period is a lot shorter than it was previously. But I also wouldn't like bet on that, right? So if your like livelihood depends on the price of Ether, I've actually taken great steps to ensure that my livelihood doesn't depend on the day-to-day price of Ether, which allows me to actually hold with a lot more confidence than most people. If everything is wrapped up in this one investment for you, you're going to sell at bad times. And that's always been my point of view that I've articulated on ETH Finance for years, is you've got to set yourself up for success. Because if you're like 100% Ether and you have nothing else, and if it drops, and now the numbers are getting big, right? So like a drop for someone who's been holding from the bottom of like $500 in a day, which we'll easily see, we might even see $1,000 days in Ethereum one way or another, that can represent a huge amount of nominal wealth for some people. And if you haven't conditioned yourself and set yourself up for success, you're going to panic sell. You're going to sell at the wrong times. We've all been guilty of that before. I've done it with other assets, or I've kind of had this mindset of like, oh, I'm overexposed to this DeFi asset, I need to sell some. I regret doing that almost every single time, because it's like, I should have just held it, and I should have just like minimized my taxes, and I should have gone with it because it's still a quality asset.
Do you ever think about the exponential part of this space? Like just a year ago, say March 2020, if I remember correctly, the intraday low was $91 for ETH. And I think I can't remember for Bitcoin, but it must have been about around $3,000, I think. But the ETH intraday low was $91. I checked it on CoinMarketCap. So, I mean, that's 45x just this week or something like that. The amount of exponential gains or growth or value accrual is just so weird for so many people. Like if I were to explain this to people outside of the crypto space, it's just crazy. And the 140x that ETH did from $10 to $1,400 last bull run was kind of, you could attribute it to this small chain growing up and this exponential liquidity or money flowing in because of the ICOs. But we're seeing very similar things happening in this year or in this bull market. So it seems that even though the scale is much bigger, or the protocol has grown so much, the exponential part of it still stays intact. And that's something that, at least if I look at the history of this space, this 10-year history of this space, it doesn't seem to slow down, or it doesn't really seem to slow down. What are your thoughts on this?
So I do think that I think we already do see diminishing returns from like the earliest days of Ethereum and Bitcoin, but that still doesn't mean that we won't see exponential or very significant returns from here. Obviously, we're working off of a bigger base, but my opinion kind of going into this, coming out of this bearish period, was that we'd eventually make 2017 and 2018 look like this small blip along the journey. And basically for all metrics, for price, for network use, for value being transacted, all of that would be dwarfed. I did expect that we would see another kind of manic period as adoption gets ahead of itself, perhaps, but also is catching up with fundamentals. And so, I think that, and so when we go back a year ago into March of 2020, that was obviously an exceptional time with like a truly black swan event, probably with the pandemic. And a lot of people were panicking then. And I remember actually going into ETH Finance one day, So actually in the days leading up to that, I actually killed off all of my leverage. And I kind of announced that publicly because I was like, I had been talking about like taking on leverage positions. And this is also part of the reason why I don't talk about my positions as much on like forums like Reddit anymore, because I don't want people to like I don't want people to try and copy my investments, because you could copy my investments, but you can't copy my conviction. And you also probably have a different risk profile and different asset posture than I do otherwise. So I might be willing to take risks that you're not, or vice versa. So I do think it needs to be an individual thing. But going back to that March 2020 date, so I deleveraged and I actually had a lot of cash on hand after that dip. And I remember like the day after, there's a lot of uncertainty. And the next week after, I rebuilt my entire Ether position and then some. And I was lucky enough to buy some Ether at $90. And I was in a private chat with Econor, who I think Eric Connor, who a lot of people watching this might know, who's kind of famous Ethereum person as well.
Wait, a private chat, right? Not a private jet.
No, yeah, not a private jet. He might be on a private jet now. No, we were in a chat. And I was like, we were watching the price collapse, and he's like, dude, you should buy some right now. Cause I had a bunch of cash in there. I was like, oh man. And I just kind of held my nose, closed my eyes, and I hit buy. And it turned out to be the bottom, of course. And so over the next week, I rebuilt my position. I remember going into ETH Finance, and I wrote probably a post that was a little more cheeky than it should have been. And I wasn't exactly feeling well at the time, but I was just kind of like, guys, I'm rebuying everything, and it feels like everyone in here has sold everything, and you guys might be left behind, and I'm worried. Like you guys should, like, it feels like everyone here is out of position. And when I got the replies on that, a lot of whom were like from diehards who had kind of held through the entire bear market, I knew the bottom was in. I hate to say that, but it was kind of like, because when you take all of the diehard believers and they've all sold and they don't have position, who else is left to sell? That was my mindset. And so I was like, well, I'm going to buy everything I possibly can right now. And I even, in a few weeks after that, I added a little bit of leverage as well. And the rest is history. I didn't know that. I honestly didn't think we'd be at this valuation during this time this year, but it was just kind of a call that I made based on what I saw as a dynamic. So I do think most of the diehards got back in eventually, which is good. But we definitely lost some people along the way through the bear market period. And I hate to see that, because, you hold through the whole bear market and then you kind of lose it right at the end before it's literally up only. And that's painful.
Also in the Bitcoin space, you had this Mike Novogratz tweet. I can't remember when it was, but he publicly proclaimed that Bitcoin wouldn't drop under $6,000, and then it dropped to 3,000, which was quite painful. I remember reading the stories that people shared. And then in March 2020, you had the same thing happen. It dropped all the way back to 3,000. So I can imagine that many people were shook out of their positions last year, which was probably, we were already, or the crypto space was already recovering, or since 2019 in recovery mode. But then this Black Swan event happened and many people were shaken out. And it's just unfortunate for many of those if you're here today and you have been shaken out of your position for whatever reason.
Yeah. And I think I actually, to add a point there, I think that it's always dangerous to say that like a price will never go below a certain level. And I've been guilty of that too. But what I don't do is I don't project that belief onto my portfolio, right? I don't just hold, if it's like, if I have leverage on, I'm not going to watch myself get liquidated. I actively manage the position if I see a decline coming. And sometimes that means leaving some money on the table or losing some money, but I'm not going to put myself in a position where I lose everything because I thought that I was smarter than the market. So you can say as kind of like a joke, oh, it won't go below a certain level. But if you reflect that, and I saw a lot of people get liquidated on that day in March, which is truly awful. And I was kind of encouraging people, look, if you have leverage, be responsible about it. And that's kind of when I was like, okay, I need to be a little bit more guarded in how I discuss my strategies, because there are people who are like trying to copy me and they're not like taking the same risk management steps that I will take in a situation like that.
Let's see. Lichuk 88 asks, when did you realize that it was best for you to quit your job, and is the Ethereum bull the main reason for it? I mean, I'll just be reading the questions. If we've already handled them, or if you feel like you've already said everything there is there to be said, then just feel free to skip, but I'll just ask them anyway.
So I really enjoyed my job for what it's worth. I liked being a management consultant. I feel like I added a lot of value to my clients. I decided to quit when I felt like my time would be better spent kind of focusing on the space, and I could get a higher expected value by spending more time focusing on things. And work was starting to heat back up again as we came out into the new year in January. And I kind of made the decision over Christmas break here in the US. And I kind of came to the decision that, and yes, the strong performance of Ether and DeFi definitely helped make that decision, because I had some degree of independence now where I could play around a little bit. Two, I also believe that if I needed to, I could get a job in the space eventually. But three, I just felt like I needed to focus on it more than I could with my job. If I had a less demanding job, I might have stayed in it longer. But I don't really regret it at this point. I think it was the right call for me. I would caution anyone against quitting their job, though, without having and I didn't sell any Ether either. So I did take a bit of a risk, but it was a calculated risk. I was like, well, I can always go back to consulting, where I could get a job in the space. And I do think that there's a risk of people maybe quitting prematurely before they've actually taken profits or have the assets that they need in place. And I don't think quitting your job needs to be like the end game for everyone either. Look, if you like your job and you enjoy it, do it. If you want to focus on something in the space, do that. I don't think you need to have the mindset of, I'm just going to quit and retire at the age of 35, 40, or 45, whatever it is, right? Do something that you enjoy doing. And for me, I enjoy being a part of the Ethereum community and helping it evolve how I can. And so that's what I choose to do with my time. And over time, I think I'm probably going to be doing other things as well. And I'm excited for some of those challenges also.
There's this very sad narrative or thing happening in the financial independence community where, especially in the subreddit, if you visit it, where people are literally counting down until the day where they're supposed to be free of whatever they are suffering from. But whenever that becomes your goal, I just wonder, I think you'll face a very big black hole once you get that amount of money or whatever. If your happiness is dependent on leaving something behind and not working towards something or seeing a bright future, it's just a very it's a very weird thing to not consider what your life will look like after you've achieved some freedom. It's just, I mean, ideally it's into something positive, like you're describing this new work that you're doing or the involvement in the community. That's a much more positive future outlook than just being able to say goodbye to your boss.
Yeah, I think my fundamental advice to people is don't run away from things, run towards things, right? So, and if you're in a job that you don't enjoy, find a better job. Even if it pays less, even if it's doing something different, maybe you have enough wealth in Ether or other assets now that you have the flexibility to take a lower paying job. Maybe it's something that you'll enjoy doing a lot more. I think people need to be a lot more creative. I think anyone who's just trying to get out of their job and just stay at home all day and play video games or whatever is going to be miserable. And you might have some joy in some near term, but you've got to kind of create that purpose for yourself in other ways.
Charles B states and asks, don't really have a question, just want more than anything to say hey to an old OG ETH, but buddy, hey, if I guess I had one, I'd be if I guess I had one, it'd be, will I able to see you in Hawaii if the event is greenlit? Let me just add a question. Like, how do you think of this whole community thing that is happening within the Ethereum space? And I don't mean the broad community and people building on Ethereum and working on the social layer, but just this very individual part of being inside of a community, posting on Reddit, posting on Twitter, and actually share some kind of very excited period in your life, very closely with a bunch of strangers who you actually know pretty well, at least in this part of their life. Whereas your regular friends or just people you meet on the street tomorrow, they won't have the slightest idea.
Yeah, I think it's interesting because for a lot of us who have been involved in Ethereum and in the blockchain space in general, most of our in real life friends don't want to hear about it. They don't necessarily share the vision. And I tried to kind of bring it to some of my friends. And there are a few who have kind of come around, but there's a lot who are just like, okay, I don't get it. I'm not interested in discussing it. So we don't really discuss it there. So we spend all of our time on online forums interacting with friends that we may never meet in real life. And I think that is a really interesting bond. And it speaks to the power of the internet. And for me, that wasn't something that was foreign, because like back in like middle school and high school, I was on IRC chat forums. back then, talking about
Mm.
Quake and video games that I enjoyed playing with friends that I made online there. And so this is just kind of for someone like me, we've grown up with it. And I think for a lot of us, we've grown up with that. And as we move into the metaverse, it's going to become even more common. So I think that these relationships can be as real and as meaningful in some cases as like in real life friendships, and that will only increase. So I think, though, that for a lot of us who held through the Ether bear market, there is a certain bond that is there because it was just a few, well, it felt like just a few of us who really kept that long-term vision. And I've had a lot of people actually reach out to me, and it's always nice to get a message like that. That's like, hey, thanks for, all your posts through the bear market, because it helped me understand why I held Ether in the first place. And it helped kind of reinforce my own conviction and why I was holding it and why I was focused on the long term. So, and I always love to like get a message like that. But at the end of the day, I'm always like, don't give me credit. You decided to hold it. You had to make the decision. Only you can make a buy or sell decision. And you did that. But I do feel like there's that camaraderie there. As for whether I'll be in Hawaii, we'll certainly see. But I would love to kind of meet up with some of the community in person that I've interacted with over the years. And Child SP is one of my favorite posters on ETH Finance.
Crypto Moon 2020 asks, please ask him about the time he said the price would never go below 200 US dollar again, not even a wick. Was he high on the technology or just joking around?
So I was definitely just joking around. I will say at the time, I felt like the formation was strong, and I was like, there's a good chance we don't go below 200 again. And because I just felt like it had been building up for a while.
When did you post this? Do you remember?
Oh, I don't remember. It was a long time ago. It was after we had already dropped back into the 80s in December 18. And then I think it was kind of like, it was at some point on the way back up, and I just don't recall the details exactly. But I was just kind of joking. It's like ETH won't go below 200 again, not even a wick. And then some people decided to take that like way too seriously. And I even when I said it, I was like, this is not financial advice. Don't like trade on this. Don't leverage it. But yeah, so after that, I was just like, okay, I'm not going to make a lot of like price predictions like that. It was just kind of a joke.
But you did say 10 to 30K in this bull run.
That's kind of, yeah. I mean, that's my feeling now. But to be honest, I'll never make like a guarantee on something like that, because we could have topped already. I don't know, but it just doesn't feel like in a speculative mania. I do think that I expect to see more of like a blow off top. We haven't seen that either in Ether or in Bitcoin, and real mainstream adoption and awareness is only growing. So I just don't see us getting to that point yet. But yeah, you can casually say, like, if I'm giving a prediction for fun, I think that 10 to 30K is still potentially valid.
Decibels 42 asks, what are 3 of the most fundamental lessons he learned in life, and who did he learn it from, whether he met these people in real life or not? The answers can be finance related or not, but generally what guides and resonates with him on a daily basis.
So here's a few that kind of stick out with me. So one, always be learning. And I really learned that from my father, who always had like this intellectual curiosity about him. He was very curious about a broad range of topics. And so really he encouraged me to have that same curiosity and to almost be like this intellectual generalist, being able to look at a lot of different pieces, how they fit together, and look at this bigger picture, and always be kind of looking towards the future. And so I always put myself in this position of learning. And especially the way that I like to learn, I like reading stuff, I like watching videos, but I also like talking to people who are smarter than me. And this is kind of my life hack for when I was a consultant, because what a lot of what consulting is talking to a lot of people in an organization, taking all their good ideas and repackaging them in a way that is actionable. Right. So I am shameless in that like I will do whatever if I find an expert on something, I will learn as much from that person as possible. I have no shame, and I don't believe in like dumb questions. I try to build up my knowledge base very quickly, because that is such a great and powerful way. And now actually, like with resources like YouTube and with podcasts, that is a lot more scalable, and the ability to learn is really just limited by your curiosity. So I think that's one. I think another like life lesson, and this is one that I really learned from my consulting career, is always ruthlessly look for value. not just hype narratives, but for value. And yeah, and I talked about this earlier already and how that really affects my investment philosophy. But, I miss out on all kinds of investments. Like I didn't buy Dogecoin for this big move.
Oh,
I
you
didn't
didn't?
buy, no, I didn't. Yeah. I didn't buy a lot of these Ethereum killers or Litecoin or whatever. It's just like those things are, because for me, fundamentally, these are assets that I have to want to hold long term. And if it's not something that I'm willing to hold long term, not to say that I'll never do a smaller flip, but like if I don't want to hold it long term, then it's like, why would I want to hold it short term for any amount of time? And is it really a gamble that I want to take when there are assets like Ether that exist out there and higher quality DeFi assets where there's tremendous exponential potential over years or decades? And so for me, I always look for that value. I look for use. I look for people willing to pay to use something. And if I see those things in a unique value proposition, right? So what is the unique value a product or network offers that nothing else on the market can offer? And that is really something that I drilled into my head through my consulting career. And probably a third thing is just in general, I probably just learned this from my time in investing, is keep a long-term view and remain open-minded to changes, right? So I'm never going to tell you that Ethereum's dominance is guaranteed for like the next 100 years. I really have no idea. I do think that over the next 5 to 10 years, it's going to have an incredible period based on how I'm seeing the community and the network and usage evolve. But it's important to be open-minded to new data. And I'm always scanning for that data. I've looked through, people were telling me that I was myopic and not looking at ETH killers in 2017 and 2018 and how it's going to be supplanted. It's like, no, I was looking at them. I wasn't seeing what they were seeing. I disagreed with their evaluation. And as a matter of fact, I happen to be correct in that. So I'm always looking at the world. I'm open-minded to changes, but I'm also very resistant to like what I'll call psyops. So if people are trying to convince me of something, like I don't just take it at face value. I have to see the data and I have to see the actual use and the value evolve. So that's kind of been my position to a lot of these layer ones, is like, it's certainly possible a competitor to Ethereum emerges, but I'm not going to like make a bet on it before it happens, right? And I'll also say that I wasn't that early to Ethereum. I mean, like, I started buying in late 2016, early 2017. I could have, like, I didn't know about the pre-sale at the time because it wasn't on my radar, but I've also told many times in finance, even if I did know about it, I probably would not have bought it because it was just a great idea then. There was an execution there. And now that I have a little bit more capital, I might be willing to take more risks like that. But still, in general, I don't like to make significant bets on things that haven't proven themselves. Because if they do prove themselves and they bootstrap some durable adoption, there's likely still a bunch of upside. That's just how I prefer to invest, and that's how I manage my risk.
I don't know what the word sassy means, so I'll just ask the question. But I literally don't know. The Nomadic 8893 asks, "Ask him why he's so sassy all the time." I have no idea if this is a compliment or I'm sorry, as a non-native, I have no idea what this word even means. So
yeah, I mean, I guess sassy is kind of just like having a bit of like an attitude or something like that is how I define it. So, and I'll say that, so I have kind of like a sarcastic and dry wit, which doesn't always translate well into text-based format, but to people who know me, they kind of get that sense of humor. And so that's just how I am in real life. I think what doesn't necessarily convey is that like I also have I think I have a generally like warm personality as well. And it's hard to convey all of those things all the time in online speak. So now, I've kind of shifted my perspective and I'm just like, look, I don't really care how people like perceive me. I'm just going to like talk the way that I want to talk. And for the people who want to like follow me or engage with me, they'll understand. For everybody else, if they read something the wrong way, like I might try to correct them here or there, but it doesn't really matter. So yeah, you could say that I'm a little sassy in that regard.
Breezy asks, "How curious about how DCinvestor went about accumulating his stack from a timing, strategy, commitment perspective, and the history of that."
So some people will remember who are watching this that back in like 2018, I used to have this a flare on Reddit. You can set your own custom flare that appears next to your messages. And I used to say, "Will not sell any ETH before 2022." and, and I held that view all the way through 2017 into 2018 into 2019 and even into today, but I'll get to that in a second. But I was just like, I'm not going to sell any ETH. For me, I was accumulating what I felt like was a world changing, the token powering a world changing technology. And so I didn't buy very much like close to the top in 2017, just because I had bought some at like, I think my earliest entries on Ether were probably like somewhere in like the order of like, I don't remember. Let's say it was like $40 to $60 or something like that. And then it went up really quick in like April of 2017. I was like, oh, wow. And so I kept buying through 300s, into 800s. And then there wasn't actually that much of a time period during the very bullish period when it went up a lot. And I was always dollar cost averaging. And a lot of people know me for that philosophy, which is because a lot of us, and I think a lot of people get wrapped around the axle with dollar cost averaging, because it really boils down. I think it's the way that most people earn their money. So most people get a paycheck and they get paid on a defined period, and they have disposable income to invest. I just was investing a little bit into Ether as much as I could. And during big pullbacks, I would try to invest even more. And during the most bearish periods of like 2018 and 2019, when we were like hovering at around $100, I literally was taking every cent I could possibly find and throwing it into Ethereum, to the point of being like reckless, to be honest. And so I wouldn't necessarily recommend that to others.
Did you tell your wife?
No, she knew. I mean, she knew that I was really investing a lot into the space, and this isn't stuff that really like interests her a lot. She kind of like trusts my judgment when it comes to investing. So I just kind of like mentioned it to her, and she's like, okay. But yeah, I mean, and so I just took I took every penny I could find and I put it into Ether while it was under $200, mostly between 100 and 200. And that paid off because I was always focused on the long term. And so when people ask me, well, how did I accumulate my Ether? It's just like, I always stayed focused on the long term. I never worried. I knew that day-to-day gyration, even though it went on for years, I never lost my commitment. My commitment actually strengthened because I saw the development that was happening, and I knew how poorly most people understood it. So it's kind of like crypto is this really unique space where you can identify a tremendous amount of alpha in the market from 100% from open source public information, just by knowing how to read it, knowing which voices kind of have weight and really are telling the truth, and being able to act on that confidently. And I don't think you can really say that about like equities or any other space really. And I think that's something that's incredible for cryptocurrency.
I personally think that the whole on-chain analytics space, for example, will grow tremendously, because we never had this thing like, as you mentioned, with equities or bonds or whatever other form of asset, or even gold and others. The amount of on-chain analytics and the data richness is so amazing. You can just plot a course for any public blockchain or public decentralized blockchain and just see whatever the data tells you. And there's so much rich data that people haven't come. Just look at metrics like the crypto fees, but even active addresses, a number of nodes, number of validators. All these kind of metrics are so exciting, and those are just the first wave of metrics. Like, I'm not even talking about statistical analysis. But this whole space is so nascent that people don't even see it. They just look at macro events or regulation or whatever they might scare them. But if you take a look at the on-chain analytics, it's just like straight up, like all the indicators are like go, like for mostly for Bitcoin and Ethereum. Those are the only two I'm quite familiar with. But the data inside of these on-chain analytics that are public and open source is just mind-boggling.
Yeah, the most dangerous thing a poorly conceived product or layer one can do is actually launch into real use, because then you're out of just the hype narrative phase, and then there's data on chain to convey like what kind of value are people actually deriving. And I think we've actually come a long way with just measuring that activity since 2017 and 2018, when there's a lot of bogus and there's still bogus transactions. But one thing that's really difficult to fake is like fee income. And so that's where Ethereum, it's so difficult to say that any of these networks are really competing against Ethereum when you look at those kinds of data on volume being transacted, number of unique addresses actually doing that transacting, the breadth of apps and tokens that are happening, the volume that's being settled, and so on.
ETH Finance asking for a friend. When will he come visit JT by the pit?
I will definitely come visit JT at some point in the not so distant future. So JT, if you're watching, I'd love to come and see you. And yeah, JT is one of my favorite members of ETH Finance and is obviously kind of one of the mods who's a key part of the community. And I call him the heart of ETH Finance because that's really what he is.
Let me have a look. We still have quite some questions. They only have like one or two upvotes. So I just want to avoid delving into or going into just any question, even though they might not be so interesting. Let's have a quick look.
Sure.
You know, I sorted them by top comment. Maybe you can go to the thread and just see if there are any questions left from the bottom, say 10 or 15 questions, and see if there are any you would like to take on. By the way,
Sure.
I will also ask you while you're doing that, I will also ask you about the artwork in the background that I've been noticing changes quite a bit. I
Oh
wasn't
yeah.
really sure, but I thought I'd ask you about it as well.
Yeah, sure. So behind me, I've got a device. It's called a Mural, Meural, produced by Netgear, and it's basically just like a. It's not that different from like a flat screen TV type thing, although it's kind of optimized to display artwork. And so by default, you can subscribe to artwork subscriptions, which Netgear will like sell you, or there's some. It comes preloaded with some. You can also load your own art onto it. So as some of the people who are watching this may know, I've amassed a somewhat substantial NFT collection and a lot of different NFT artworks just because it's a space that I'm really excited about. And so I was like, and I live in an apartment. I was like, well, I don't have a lot of space to like hang stuff on my walls, but I thought it would be cool just to have one screen that's displaying some of this stuff. And so I kind of put it behind me. If I'm on Zoom calls with people, they can kind of have something to look at. It's a bit of a conversation piece. But yeah, all of the NFTs that you've seen displayed on there, and it doesn't always come through clearly on the camera, but those are all NFTs that I own. So right now, we have pieces by Dmitry Cherniak from his Ringers series displayed on the screen. Probably, and I saw one of the questions was, what's my favorite NFT? So these are some of my favorite NFTs right here. The Ringers collection. And this is generative artwork, which is a space that I'm really excited about. And basically the way that it works is the artist creates an algorithm which generates the artwork. It's actually stored on chain. And then your transaction to create the artwork provides the randomness for that random number generator. So it's actually a profoundly interesting way of creating art because it's almost like the artist has to turn over full control to the algorithm and can't control what the output is. And so it's really hard to do it well and create a good set that is both diverse but also visually appealing and cohesive. And I think that Dmitry Cherniak's Ringers series, which you can find on artblocks.io, is one of the finest examples of that. So that's probably one of my favorite set of NFTs. The other has to be my autoglyphs. And that was actually the first on-chain generative artwork created by the creator of CryptoPunks. So I own several of those. And I really view those as like pieces of generative art history, like really foundational. And I'll just share with you and with your audience that I don't really buy NFTs to like flip. I haven't actually sold any NFTs that I've bought. I buy everything for like the really long term. And for me, I just like to collect stuff partially. So that's one. And I like collecting digital stuff because it doesn't create a lot of, I don't need a lot of storage space for it. And I can admire it and I like having it. But I also know that these will become profoundly important assets over time.
If there's, I can sincerely say that there are very few regrets, but if there's one thing, it's the I completely miss. I'm pretty sure I got the announcement, but I missed the CryptoPunk sale, and I just wasn't aware. And looking back on it, I wouldn't be interested in flipping any of those either. But the profoundness of the project, and there are a couple of those, but especially the CryptoPunks, I just feel I just regret not being aware of it or just completely missing it. I don't know what happened, but I just completely missed the sale, and I would have happily bought one or just one that excites me. But as far as I know, they are too expensive right now for me to purchase.
Yeah, keep an eye out because the price does fluctuate if you really want one. But yeah, well, I didn't get them when they first came out, and very few people were aware of them. I do have some
Mhm.
friends that were on top of it and just claimed them because they were free, basically. And some of them who held on to them have just made a ton of money or have a lot of wealth from holding those. I got into CryptoPunks actually in February. So after I quit my job, I started to explore the NFT space a lot more just because I had time. This is one of those examples where I was like, now I can really spend time learning about these things that I might not have focused more on. And I bought some CryptoPunks then, but as it turns out, I was still somehow early. And then they really just kind of took off parabolic shortly after I got into it. But anyone who follows me online will see that I have punk number 294 set as my avatar, which by the way recently appeared in Times Square, and which I was really excited about. I was able to donate to Save Art Space, which is a kind of a charitable organization focused on advocating for art, and they hosted my punk in Times Square, which I just think is really cool and is a lot of fun. And so we're exposing the world to CryptoPunks and to Ethereum.
There were some questions in this list, and just I'm reminded of this. Just the conversation that we're having today would sound so foreign to people just 5 years ago. The fact that you bought a CryptoPunk and it's some kind of digital art represented as a non-fungible token, but you did see it on Times Square and it's in the back in the room where you're sitting. This whole space is so exciting. For an outsider, for an insider, so many things are happening, and it feels like, at least in this period in time and space, many things are coming together as well. And it's just again, an easy conclusion is that this is such an exciting space where you even see your CryptoPunk on Times Square.
Yeah, exactly. And I'll actually say that a big part of the value proposition that I see long term is the emergence of like this metaverse that we've talked about, because I think these assets will become more valuable because they're going to be usable in those contexts. And as people live more and more of their lives online, you're going to see more and more value accrue to these, to the point where a lot of these higher tier NFTs are going to become financialized, and they already are, but you'll be able to borrow against them, maybe even like lease out exhibition rights and stuff like that.
Mhm.
We don't know how all of this is going to evolve, but it is a really exciting space, and I figured it was worth putting some capital into. But also I enjoy the artwork and I enjoy supporting some of the artists that I'm buying from. And so for me, that's just been my, I don't flip, I'm not flipping stuff. I really buy to collect.
Yeah. Did you find some questions that you still think are relevant to answer? I mean, we've been talking for almost an hour and 40 minutes, and time just flew by. Like I barely noticed
Wow.
we've been talking for this long.
Yeah, time flies. I think we've covered some of the. Let me just look at it real quick. Someone asked about the flippening, and I'll just tell you that I don't focus on the flippening that much, to be honest. I mean, I actually do view it as an inevitability at some point, and it may be in the near term or it may be in the future. It may be like we flip in and then flip back and then we break through more next time. But I really view the demand for Ether and Ethereum to be based on supply and demand. And so I see a lot of long-term demand drivers for Ether with a supply that is contracting. And I think that growth in demand will outpace the growth in demand in Bitcoin, which is really more of a single play on digital gold, versus Ether, which is going to become this really diverse asset that people are just starting to understand. And right now, you actually see, like, I would say you probably see institutional smart money buying in now. Some smart retail is starting to buy in as well. All the early people, or people like myself and other people on ETH Finance, we were already in it, but like you're going to see a lot more people start to come into it and buy Ether as an asset. So my advice to people is not to focus that much on the flippening. If you want to own some Bitcoin, go for it. I don't own any Bitcoin right now, and I've kind of pronounced that on Twitter a few times and in the subreddit, that I don't own any Bitcoin right now. And that's just a personal choice. That doesn't mean that you don't have to, or that's not smart to own any, but I have like gradually exited out of all of my Bitcoin over the past several months at this point. Other questions on here. There's a question on proof of stake, and I'll just say that I think proof of stake is actually a really important step in the journey for Ethereum. This isn't something that's new, by the way. The manifestation of what it will look like is somewhat newer, but this has been part of the roadmap basically since the very beginning. We always want to move away from GPU mining, moving into this being secured by Ether as an economic collateral asset. And just for context, just yesterday, Elon Musk announced that Tesla will no longer be accepting Bitcoin for payment of Teslas, which probably wasn't a lot to begin with, but cited the environmental concerns as a reason for that. So I think the narrative, and we've also seen a lot of, frankly, misinformation, disinformation around Ether and Ethereum and NFTs from like people in the traditional art community who are like more, I think, expressing a rejection of NFTs as a disruptor for their industries than like truly being focused on those environmental aspects. So, but I do think this narrative is really important. And I think it's important that in Ethereum, we're also moving towards a rapid merge of the proof of work and proof of stake network to the point where I think there's a very good chance it might happen in less than a year. And I've actually been a part of that process as like a community participant and observer. Justin Drake and Danny Ryan asked me to kind of help out and listen in on some of these transition discussions. We actually had one of them this morning. So I think there's a lot of progress being made here. So I would be surprised if we're not on full proof of stake probably within a year.
Yeah, this is what I was going to ask. You're not just referring to the merge that is slated for October or sorry, December 1st. I think you're talking about the full merge being the initial merge and then the post cleanup merge.
Well, I'm just talking about the merge in general. And so I don't have a full handle on like the roadmap for all of the steps that would be involved in that, but I'm defining the merge first as just like turning off proof of work. And that's kind of like our first priority. And there will be a lot of other stuff we need to do after that.
As I understand it, there's this post cleanup merge where they will introduce transferability, among other things. So that would be the point where proof of work is completely cut off, at least as far as I understand.
Yeah, there's still a lot of TBD in the roadmap. And actually what you see right now is like, so as part of this Rayonism movement within Ethereum, as part of the ETH Global Hackathon, which is really going through this month, they're working on doing a rapid merge, kind of like just pulling the clients together and seeing if they can talk to each other. And so far, we're having a lot of success with that, which bodes really well for the ability to do the merge. I think what a lot of people don't understand is like the hard part is already done in the sense of getting that bonded validator network. Now there's like, I don't know what it is, like 4 million Ether secured, which is like $16 billion or something like that. There's a huge sum of money that is on the line for ETH2 to be successful. And that is a huge signal, but it's also a responsibility that I think we're going to meet. So like, we're going to get this done, and it's going to happen, I think, a lot faster than people expect.
Would you say that the EIP, so both 1559 and the merge are already priced in? We can take the efficient market hypothesis, or just a general question, like, do you think it's priced in already? Do people even expect, does the current price, I think it's around $4,000, does it already expect the market being aware of these changes?
Well, let me put it this way. I think these are the two most significant moments in Ethereum consensus, like 2 of 5 of the most significant consensus moments in Ethereum history. I think the first one was the DAO hack and the decision to make the adjustment to kind of reverse some of those losses. The second one was when the parity multi-sig was hacked, and there was a decision at that point to not roll back the chain, which a lot of people thought would happen, and that they would get those funds released, which kind of like showed that, hey, we're not going to do that again. The chain is like hardened. We're going to keep the state like immutable, so to speak. We're not going to have human intervention change that. And the third was when the community rejected the implementation of ProgPow, which was the shift away from ETH towards another hashing algorithm, because it would have kicked ASICs off the network, which we don't know exactly how many ASICs are on the network, but it would have. Hey.
And we're back.
Hey, Kobe, I'm sorry about that. My computer crashed on me. I have no idea why. So I'm sorry about that.
It's fine. We're still recording. Everything's still on. So never mind.
Okay. Yeah. And I don't know. Do you recall how far I'd gotten through before I lost?
Yeah, you described the first 3 moments, and you mentioned, you were talking about ProgPow, and how that rejection was actually a third significant sign.
Yeah, that was a really significant moment in Ethereum history, in the sense of, the community kind of went against what some of the popular developer consensus was. and we didn't want to see a fork over it. We didn't think it was beneficial to have GPU miners have that much power, especially as we're moving towards proof of stake. And that ended up being rejected, even though a lot of people think it would happen. I think the next two moments are the implementation of EIP 1559, which is hugely popular among the user base and among ETH holders. It's going to streamline transaction submission significantly and obviously hardens ETH tremendously as an asset, and also the shift to proof of stake through the merge. So does the market price those in? I don't think so. I don't think that many people understand it yet. And I think the more that it is popularly understood, the more people will really view Ether as this asset that is worth holding for the long term, in a way similar perhaps to how they view Bitcoin and other stored value assets.
DC, on that note, is there anything else I should ask you or that you want to share before we wrap this up?
No, I mean, I think we covered a lot of ground, and I just really want to thank you again for the opportunity to chat with you and to engage with the ETH finance community in an extended way. It's really been my honor and my privilege to engage with you all over the years, and I'm just really excited about everything that's still to come for Ethereum. This is really just the beginning of us transforming the world. I truly believe that.